Hey guys, welcome to the Silver Report. Here we are, Sunday, February 12th, 2017. We have gold currently trading at $1,231.30. The markets are moving. We have silver at $18.05. It's up 0.03% from the earlier high. And let's get into some of the economic factors that are going to be playing a part. And we see that we have numbers that are showing that the U.S. economy is actually much worse, doing much worse than they want to make us believe. And the U.S. logged a $502.25 billion trade deficit in 2016. And now, one of the reasons that this is just not an easy fix, it's been the largest in 4 years, and it is a gap President Donald Trump is setting out to narrow. He's trying to bolster the U.S. economy, but he faces obstacles in the coming months and years, including the potential for a stronger dollar, larger federal budget deficits, and low national savings rates compared with much of the rest of the world, all of which could force trade deficits to widen. In the past years, the 2016 gap, it was reflected a large deficit for U.S. trade in goods with other countries. It's offset in part by a trade surplus for services, so we export services, but the gap in terms of goods was only about 347 with China last year, 69 billion with Japan, 65 billion with Germany, 63 billion with Mexico. So for December, the total trade gap decreased 3.2% from November to a seasonally adjusted 44.26 billion. Exports rose 2.7%. And what we're facing when we're checking the balances is that since the late 90s, we've had something set in. And we see that in 2016, the current deficit is 502.15 billion trade deficit. That is how much we are importing compared to exports. And so this has been brought up, but the reason that this is going to be so difficult, the gap, it widened starting back in the 1990s with China's emergence as a world trading power. And recent research shows a surge of imports from China put downward pressure on U.S. wages and manufacturing employment. And we know that it is an uneven benefit. We know that it has devastated the U.S. economy. Ever since free trade was signed over to China in the late 90s, we already began to see the devastating effects. If you look here at the chart that is shown, that the trade deficit was barely existent back in the late 90s. There was still a deficit that had begun, but it was barely existent, as was China as a world manufacturing power or a world manufacturing superpower. So what we saw in 2016, the total deficit rose modestly from the prior year to its highest dollar level since 2012, but it shrank slightly to 2.7 as a share of U.S. economic output after hovering at 2.8% gross domestic product in 2013 through 2015, and that was largely because of weather factors. We had a highly inflated number for U.S. exports in the third quarter in 2016 only because of severe weather came through and it wiped out crops of soybeans, so the world's soybean farmers ended up not having enough for the demand, and so the United States was able to step in and fill that gap. That is not the normal. The gap, it fundamentally reflects now that Americans consume more than they produce relative to the rest of the world. To shrink the gap, they would either have to produce more or consume less. And so this is where the issue comes in, because this is not easily accomplished. This has been taking place for decades. It was intentional. There was warnings from economists of what this would do, just like there was with the TPP. Thank goodness we have that struck down. It would have been devastating to this economy. But they warned about it. They also changed the names of what it means to be unemployed. If Americans consume less, the deficit could contract along with the broader economy, as happened during the 2001 and 2007 through 2009 recession, leaving workers no better off. To produce more, U.S. firms could export more and take market share from imports. Tariffs could help that happen, but other countries might retaliate. And so what we're seeing is China is no longer a small country. It's no longer a small country. We know that NAFTA has devastated this country. Has devastated. It was giving over the United States economy to foreign powers. And it wasn't just that, because there was no infrastructure in these countries when NAFTA was signed. In order to produce or manufacture goods, the companies that were in the United States moved over to these countries because they could employ low-wage workers, which you're not going to find in the United States. They could employ slaves. They could manufacture by hand products that, for the same cost that it costs to manufacture in the United States. And we see that this has caused much more damage, because one of the ways that the manufacturers in the United States went to cope with this devastating trade deficit was to begin to produce higher end specialty items, those that were in the manufacturing industry. If you go through manufacturers' trade shows, you will see that they are playing to a clientele. For example, like furniture manufacturers, technology manufacturers. It seems like the entire technology manufacturing field that is contained within the United States is manufacturing goods for the military, is looking for military contracts. And we see that in the furniture industry, they're playing towards high-end private schools because they cannot compete with these low-cost manufactured Chinese goods. Low trade, no tariffs, able to sell them within the United States. They can't compete with price. The only market they had were higher-end consumers and very specialty items. This was what they used to be able to save their manufacturing. And the issue that has arisen within the United States, especially after the great crash in 2008, is the fact that we're broke, folks. We're broke. The money is gone. And so those high-end specialty manufacturers are seeing a decrease in orders because people no longer can afford to live like that anymore. We're no longer prosperous. Not all of us, only some of us. We see a major disparity that is growing in this country between the rich and the poor. There is no more middle class. They were the workers that worked there. But they no longer have the money. And so that higher end consumer, so we are watching devastating effects. This is why we're seeing massive layoffs within the manufacturing industry. Because they were on their last legs. Their tactic they used, changing products, changing customers, it's failing now because we no longer have that specialty market anymore existent within the United States. The dollar's rise since Mr. Trump's election could present a headwind for export demands because it makes U.S. goods and services more expensive overseas. The U.S. currency has appreciated 23% since July 2014 and by 2% since Trump was elected. That's according to the Federal Reserve data. Moreover, the new president's stated desire to cut taxes and increase government spending could expand the federal budget deficit. And we already know we're already spending into the deficit. We're already increasing this national debt. In the past, it's been accompanied by a wider trade gap. So we're going to see some of these, when you want to go to try to fix this economy, there's so much that's being done on an emotional level at this point. There's so much that's being done on a philosophical, ideological level at this point when it comes to fixing this economy. You need to be more specific about what needs to take place, and we might see an impossibility. We may now be seeing a return of the twin deficits that we saw in the 1980s and in the 2000s. There's a tension between Trump's goals of fiscal policy and trade. That's the issue that we're facing here. And we're being crushed when it comes to trade. The damage is so vast. And it's not like it's by accident. It was well focused and targeted. And the intention was to bankrupt not America, because we see the GDP is almost at the same level. And in fact, it's only higher now because of the mass money printing and devaluing of the US dollar. This creation of money has created a higher GDP. But for some reason, how is our GDP higher but the citizens are broker? How come we don't have any money? There's no jobs, but the GDP is higher. So it was a very specific attempt to eliminate the individual wealth of private citizens within the United States. And it was effective. And the damage that has been done by this. Walk through some of these major cities. Walk through Detroit and tell me how great the economy's doing, how it's recovered. Walk through Detroit. Looks like a war zone. Looks like Syria right now. And tell me everything's fine. Look at Philadelphia, one of the largest cities in the United States. Look at Buffalo. Look at Rochester. Look at these abandoned, empty factories. Look at the devastation that has taken place in this country. And tell me the economy's doing fine. Let me know when we get a raise, and I'll tell you when the economy's doing fine. Which is why you need to take steps. The fact that they're not being honest and they're not coming out and explaining the fact is why you need to take steps to protect yourself and your family. Silver and gold are the best investments to have in a collapsing dollar, in a devaluing dollar, because this money that they've printed is yet to enter circulation. And any kind of enthusiasm or excitement that is taking place now among consumers is going to bring this money, this vast piles of printed paper out into circulation, and you're going to see a massive devaluation of the currency and a massive increase in the price of all goods and services, and it's going to set in very fast. And what are you going to do if you're too late? All right, thank you guys for joining me. If you like the content, be sure to subscribe, like the videos, share the videos. It's the only way. We got to get the word out. We got to wake the people up to what's really going on in this country. And I thank you so much for joining me. And as always, guys, be safe.